Overnight, we saw equity markets start to stabilise, and this follows a week of steady declines. Now, we also saw the New Zealand dollar stabilise against the US dollar, and it's now holding at around 78.50 against the US dollar. The New Zealand dollar has lost a lot of ground over the past week and is down about 4.5 cents. And we now see the New Zealand dollar a little bit more closely aligned to its fundamentals. Now, we expect this risk-off sentiment will continue in the near term, and that will continue to place some downward pressure on the commodity currencies. Now, particularly with the uncertainty that is stemming from Greece, as we're continuing to see politicians struggle to form a government after last week's election. Now, the pound found some support overnight following the Bank of England's decision not to expand its asset purchase program. Now, while that was the central market view, there are still a small group of economists expecting to see an expansion in the asset purchase program. And what is quite likely to be happening is the Bank of England is preferring to keep its powder dry, particularly if it should see further deterioration in the Eurozone situation. Market expectations are likely to be positioned to see further expansion in the asset purchase program, and overall this should keep pressure on the pound over the near term. Australian job growth figures were the key highlight of Australasian markets yesterday, in particular given that markets are expecting further rate cuts from the RBA, and jobs growth will be a key leading indicator for that. Now, jobs growth was surprisingly strong, and we saw the Australian unemployment rate drop sharply to 4.9% from 5.2%, and this provided some support to the Australian dollar and also dragged the New Zealand dollar higher with it, as is often the case. Now, the pleasing result in Australia also saw interest rate markets reassess the pricing of rate cuts in New Zealand, and we did see a substantial unwinding in rate cut expectations yesterday. Now, markets have moved from pricing in around 40 basis points of rate cuts at the start of the week to just 20 basis points yesterday afternoon. Now, we don't expect the RBNZ to cut the OCR at this stage, particularly given the sharp fall in the New Zealand dollar we have seen over the past week. However, we do believe the Reserve Bank can leave the OCR on hold for a bit longer if it needs to, and we now expect the RBNZ to keep the OCR on hold until March 2013. This compares to our previous expectation of December 2012.